Good morning. Well, the Aussie share market is eyeing its fifth positive day of straight gains. All sectors are up today. Staples, financials and telcos at the moment are up about 1% or more in early trade. It really comes as we saw US stocks rally on Tuesday, hitting 4-week highs, with the positive sentiment coming from the fact that equities have strongly bounced back from their prior session on earnings season kicking off with a bang, with investors putting the US-China partial deal to one side. In terms of what to watch for the rest of the session, well, after APRA announced banks need to bump up their capital requirements to support their NZ subsidiaries, the big four banks are extending yesterday's gains. NAB is up the most today, and there's some talk on the street that banks' dividends will be cut, but broadly speaking, Citi says banks' dividends, after Westpac's anticipated cut, banks' dividends will remain intact. Citi and Bell Potter say the extra capital requirement will have the least impact on NAB, which is one of the reasons why NAB shares are doing so well today. Citi's target price for NAB is $30.50. It's currently trading 1.2% higher at $28.97, and Citi's targeting a return on equity for NAB of about 12% and expecting that to grow to 12.5% in the following financial year. For CBA and Westpac, Citi expects a fall on return on equity, while for the other big four bank, ANZ, things should moderate after ANZ's restructure, despite ANZ announcing yesterday that the APRA net impact is unclear. To the IPO front, well, Latitude Financial Services has been pulled from floating on the ASX after the lead brokers Goldman Sachs, Macquarie Capital and UBS made the decision last night, with the company allegedly losing support and buy-in from the initial target price of $2. It does have a bit of a flow-on effect for the buy now, pay later space, because that's where one of the target growth areas for Latitude Financial was or is. So what does it mean for local ASX players? Well, the first mover in the buy now, pay later space, Afterpay, is seeing their shares fall today on profit taking. And of course, they hit an all-time high yesterday at $37.41, with some traders today taking advantage of today's dip in terms of Afterpay's shares. Citi says Afterpay's stock still has plenty of headroom, and Citi's targeting a price target of $41.61. Goldman Sachs expects Afterpay's shares to rise to $42.90 on the back of Afterpay strengthening their dominance and foothold. They gain about 13,000 customers a day, and their active customers are now 4.6 million. That's 130% more than last year. Zooming out back to what happened overnight and where that positive sentiment is coming from. As we mentioned, most US companies have reported overnight, beating expectations of those that reported overnight. In terms of standouts, United Health shares made their biggest one-day gain in over a decade on better than expected profits. Johnson & Johnson shares jumped on higher sales of cancer drugs, and JP Morgan Chase shares jumped over 3% as their profit beat expectations for the third quarter. And despite the US slowdown fears, the US consumer is still supporting the economy, as JP Morgan's borrowing customers are more than expected, and they're still repaying debts on time. As for JP Morgan's trade desk revenue, well, fixed income revenue rose $300 million more than expected, and this really shows the trend for the broader industry that we're seeing around the globe as investors plow into bonds. In terms of the indices, the Dow finished up 0.9%, the S&P 500 up 1%, and the tech-heavy Nasdaq was up the most, 1.2%. Over in Europe, their stocks closed mostly higher, with EU negotiations eyeing a smooth transition for the UK's October 31 Brexit. Over to commodities, gold has lost a bit of momentum on global equities bouncing back. Gold is now at $1,484 an ounce. The oil price fell about 1.5%. It's now at $52.91, continuing its decline of late, while the Aussie dollar is currently buying 67.48 US cents as the US dollar index, or the DXY, gains ground. I'll see you once the markets are closed. Have a happy day of trading.